So the only thing I would say, we have a good pace all together, all players, but it's not over. So it's only 1/3 of the journey. So we really need to continue growing. Israel is 3 to 4 times bigger, and come on, the country is smaller than Switzerland. Huh?
Hi and welcome to another episode of Startup Stories, the podcast that brings you your weekly entrepreneurship education and startup training by Europe's most inspiring founders. This episode brings us together with Nicolas Burer and Matthias Zwingli from Digital Switzerland, an organization that comprises more than 130 leading companies, organizations, academia and politics to achieve its mission to establish Switzerland as a leading European digital innovation hub. Working with startups is an integral part of this mission, which is why I was super excited to hear they would join us for an episode of our expert series. Nicolas Burer is the Managing Director of Digital Switzerland and Swiss Business Angel of the Year for 2018, and Matthias Zwingli connects startups, corporates, investors and hubs as a startup ecosystem builder. In this compact half-hour interview, we covered important questions on dealing with business angels, working with corporates, and more. I'm super excited to share this first expert episode with you today. Enjoy! All right, then let's start. Welcome, Nicolas and Matthias, to the show. We're really excited to have you here. Could you maybe in a few sentences explain what you do, and because you're at Digital Switzerland, what's the problem you're solving?
So thank you first for inviting us today. Very nice. Why Digital Switzerland? It's quite simple. Look at the current fourth revolution we are having in the world. It's very global. It has never been as connected as what we are living today in the world with technology and everything. The pace is extremely quick. So there is a movement worldwide in the not digitization, it's also robotization, automation, whatever. And it's just about either you win or you lose, if I can make like that, Mm-hmm. And at the end of the day, it's about jobs. So you will have places in the world, hubs, it might be cities or countries, whatever. They will make the race, like Silicon Valley, Israel or China so far. They will make the race means they will have millions of jobs because they are very innovative. Mm-hmm. And they are able to export their technology, whatever, all over the world because the world is global and connected. And everything is so quick, you cannot take them over. So what we do Digital Switzerland, what we believe is we need to kick a bit the country to make sure we are still very innovative in the next 5 to 10 years to be one of the winners. It's very simple. It's about jobs. We don't want only to consume. We want jobs here because if you have jobs, you have to have more money and you can consume more. Right? It's always the same stuff. So this is what we do. Coming from the helicopter view, the macro element. It's about jobs, and we want innovation in the country, and we want to be able to export what we do here all over the world. So, and our mission is making Switzerland a leading digital innovation hub worldwide. Okay. This is our mission. Right. And we have 6 horizontals and 4 verticals. We are working in the area of politics, education, startup ecosystem. Matthias can say more about it after. Corporate and SME, population, the digital day. Maybe we can say something about it later on. Sure. And international visibility. We do a lot of good things in the country. We need to export it better. Then we have the 4 verticals: life science, food and health, fintech and crypto, technology and infrastructure, where we're looking for big projects, materons, to push also internationally. We have 140 members. What we do, the way we work is we give impulse, we catalyst, we connect people, and we try to really multiply everything we are doing. With very important cross-industry, because digitization is all over the place. Maybe you can give me one industry who is not touched by digitization. I don't know. Everyone is really somewhere digitalized. It might be customer process, internal process, whatever, business model. So it's cross-industry, and we connect academics, corporate, SME, startups, investors, politicians, regions, cantons, etc. This is what we do. We're not a federation, we're a movement. Digitization is a movement. It's not a new industry. It's like everywhere.
So concretely, if you look at a day in your life, what does that look like when connecting all these players together? What's your job concretely? What do you do?
We have
events, or how can we imagine that?
With our team of 15 people, we have a board of 15 more people. They are all our bosses.
You have 15 bosses?
Yes, we have 15 bosses. We have more than 30 projects. And in the verticals, we have 11 working groups. So it's a huge, we're like a big spider, We have many small or bigger projects. And everywhere a huge amount of stakeholders. I mean, Matthias has to do with so many stakeholders in the startup ecosystem, and the politician side, so many stakeholders. So my daily job is to try to connect everything. So it's a lot about not only connecting, it's kind of having the helicopter view, so always somewhere, the strategy, having the right strategy, being opportunistic but still having a vision. And it's a lot about of course, managing the team, managing the projects, managing the bosses, and make sure everything is fine, we are aligned and we understand each other. And it's a lot to do with people, definitely. So we have 140 members, we need to manage them. So a lot of meeting, a lot of calls. I don't know, if you ask me concretely on a daily basis, I have, 20, 30, 40 calls a day, maybe. Many calls, many meetings, so quite intensive.
Yeah, Matthias, so you just mentioned you're in the startup ecosystem.
Exactly.
That's especially interesting for our listeners.
Yeah.
What does Digital Switzerland do there?
Exactly. So what are we doing in the startup ecosystem? I think it's two main points. One is we connect the ecosystem. We create a neutral platform where we want to address Switzerland as a whole. To reduce friction and to help interconnectivity. So basically what we do is connecting startups to corporates, to investors and hubs. And I can give you two examples. So for example, one of our flagships we are doing is more in the business development. So we connect Swiss scale-ups and international scale-ups to our corporate network, but solely on business development perspective. So that's all about collaboration. We do the first intro, the first matchmaking, and then they evolve it from there. Because I think it's quite fast in these worlds, from corporates to startups, if there is a potential to work together, and from there on you move on. So we bring the right people in the right place, and if there's a match, it continues. If there's no match, you didn't waste.
So who usually starts the process? Is it like a startup coming to you and says like, hey, we need help, we need a corporate partner in this field, or someone who helps us with that, and then you connect them? Or
so we started it last year the first time, and it was quite interesting. So it was more there, we reduced it to the verticals we're looking at. We have corporate partners, and there it was more, who do we have, which verticals, for example, fintech and cybersecurity is interested in that. And then we were looking for startups in the Swiss market for the scale up, and in the international market, which could fit or which have a product that could fit back to the corporates. So we do the curation to some extent, and to search the startups who have a potential or have a product that could match. But of course it's not fully curated, it's a little bit, you see what's happening in the end as well. So that is one, I would say. And another one is internationalization. So what I thought was interesting, the Startup Radar came out with a very interesting number in my opinion. So they looked at the last 10 to 15 years of the Swiss startups and how they evolved and how they grew. And so it's two factors. Most of them, the biggest mortality rate was after 6 years, and the highest growth was after 10 years. And if you benchmark that internationally, we are quite slow. And it's an interesting number because we have such a small domestic market, but we still struggle to grow internationally, I would say. And that is really something we want to help to speed up. If you look at Israel, they go a lot faster, and I think what we need to change in the mindset is that we think global from day one, but we pilot in Switzerland. But you really have to build a business, especially in the digital world, that is made for not 8 million people, but 8 billion people.
So you think that the one of the big reasons is the mindset of the founders that don't think big enough, maybe?
Both ways. I would say we're Swiss. Me as well. We're a little bit risk averse. I would say we like to prove our idea first. We have super high quality startups compared internationally, but it's not just the startups; it's the ecosystem as well. So it's the hubs, it's the corporates, it's investors. I think back in the day it really worked. You could think Swiss, and you had a great company. Nowadays it's so more, as Nicolas said, it's so interconnected, it's so global, and the digital world really helps you and makes it possible to grow in a worldwide scale. And if you can master this, if you can really be fast in this, I think we would have one of the best hubs worldwide to do it. We have to grow. We have a small domestic market. If you look at China or the US, a lot of startups there, they stay in their domestic market, and some made it internationally, but most of them, they still are in the US or in China. And we would have the whole world. We just have to learn to do it fast.
But we often had that with our own startup. Like you actually, like if you are in the US and you work in the digital world, one example is digital marketing. You just have suddenly 350 million people with the same language, and
it's big enough.
It's big enough, right? You can actually do something with it. Like you can analyze, and you have you can specify the target group and still have enough people. And if you do it in Switzerland, at some point you end up with an audience of 100 people, and then you can stop there, right? Yeah. Or you have to go international. So I really see your point. It doesn't work.
We have a unfair disadvantage at being in Europe. Let's face it. 40 languages, whatever, 40 countries. That's a big disadvantage in the current revolution phase. Let's face it. And we have to learn really to still scale. Otherwise, we just consume American and Chinese. They are able to come to Europe easier than we go there. So, but we have to learn it quickly in the next 5 years. We need some success, definitely. I think it's always like in the Silicon Valley. The big companies, the founders, they now reinvest, and you really have an ecosystem. It's coming in Switzerland. It's still small, but it's coming. We are number 5 in Europe. I always say the same with 1.2 billions. We're number 5 in Europe. New York is how much? I think 15 or 20 billions. Silicon Valley more, China more. So far away from the top 3. We're number 5 in Europe. So better than many other countries. We have to keep the pace.
Definitely. If we look from the founder's perspective, that's someone who's starting out, and maybe you with your experience as an angel investor, we had a question: at what point does a startup need to raise money from a business angel, and what does that depend on? Like, as a business angel, what are the startups where you said like this is the right timing for you to come raise money?
You asked me the question on a founder side or angel side?
Can you answer both? I mean, that would be amazing if you could answer both.
On a founder side, I think you have 2 options. It's easy. Either you do it self-finance, trying to grow very low salaries, nothing, and try to grow sustainable. It will take 3 years, but then you have all the shares or whatever. Or you raise directly money as soon as you have a prototype or something. I think, if you're a second-time entrepreneur, I would say you can go and for 1 or 2 millions quite quickly without nothing, just a PowerPoint, because they will trust you. If you're a first-time entrepreneur, you need a prototype, or you need to sell very well, or you need a prototype or first revenues, and then you can go for angels, I would say. I see too many concepts, it's really too early, and since they're first time, I think they will fail. So that's the point. On an angel side, I would say in my case as early as possible, because then it's too late. If it's too late, the valuation is too high. And if you're it depends. You have the early stage angel and the late stage angel, Then you have the VC and CVC, whatever. There are some business angels, they look a bit later. They look for a diversified portfolio, having 10, 20 investments. They are more passive because of how do you want to manage 10, 20 investments, but they look for a bit less risk maybe. and a multiple between 5 and 10, let's say.
Yeah.
And these guys are rather looking for seed series 2, and having a bit higher valuation, but they can sleep maybe better.
Yeah.
And you have some angels, they really look to be the first one. Really the first one, and maybe still on the PowerPoint basis, low valuation, very high risk, but more shares because low valuation and to be engaged. So that's more what I do.
Yeah.
Less, but then very engaged. Very high risk.
What's the number? Low valuation. What does it to what valuation is that for you as a business angel?
Okay, it's a good question, and I think it will evolve over time. Right now, a good valuation is below 5. As a business angel, you try to get at least multiple 10. If you give so many hours and you don't get money at all, you have to wait 5 to 7 years. You want multiple 10, otherwise it's not worth doing it. And today in Switzerland, it's one of the issues we have to improve is the number of exits and the number of big exits. As soon as we can go global and we can have some unicorns or still half unicorn, it's still huge.
Yeah.
Then I don't care to step in at 5 or 10 or 20 even. But today, if you invest in a Swiss startup, the probability he will be still half a unicorn, 500 millions. Is very low. We have, I don't know, maybe 1 or 2 cases. So, and that's a mindset also the angels, by the way, to encourage startup to go very far away, don't sell in 3 years, make it for 7, 8, go global and make a unicorn.
Yeah.
Then I will step in at 10 or 20 or even 30, and you don't care. But still, we also have the mindset this company will be a 20 or 30 or 50 millions exit, which is still good somewhere. Then you want to step in below 5. Otherwise, you don't have your return. So that's also a bit, I think, the angels and the VC to encourage or to take, let's say, the risk to step in maybe a bit higher and encourage them to go very far away and very global. So we're also somewhere half responsible of encouraging the ecosystem, all of them. But I see some good tendencies on the market somewhere. What is not okay if when a startup is coming with nothing, a valuation of 10 millions, and you feel directly, come guys, it won't work. Or it won't be big, in my opinion, no? It won't be big. Then you say, that's wrong, that's wrong. Or they speak only about Switzerland and they will go global after 3 years. Then that's not gonna work. So, but I hope the valuation will go a bit higher. In the US or in Israel, they raise good guys, second time entrepreneurs. They can raise 5 for 25 on PowerPoint basis. So when the day is, but that's the way to go to a half or a unicorn somewhere. Yeah. Otherwise, you get too much diluted over time. So that's the way to go, and we need to reach this level soon, also in Switzerland.
Yeah. As a founder, you're very early stage. It's very difficult to put a value on your company. How would you, as a founder, what are your tips?
There are no
ways.
No, there are so many methods, discounted cash flow, everything.
Yeah.
But let's face it, there is nothing really good. It's about selling. It's about selling your dreams. Sorry, I don't know. Maybe some guys have a better method, but for me, it's about selling your dreams. And they should believe in you.
Right.
Sorry, also this discussion about valuation is it's impossible. It's a negotiation every time. And one of the ways you can do as a founder is showing a plan where is going to be the exit. Of course, it's just a plan. It will never happen like that. And showing the number of series you might need, and the dilution you take into account.
Yeah.
And saying, look, I want to have so much because I'm the founder and I want the company to be successful and I stay. I want to be so much diluted, and so you come back and you explain why you would like to have a dilution of 20% today, for example, and not 40. Yeah. So you can negotiate. This way, as a founder side, is working quite well. And a smart business angel will understand it because the worst case when you invest is, of course, the business model doesn't work. But the second worst case is the founders stepped out after 1 or 2 years, and there is no replacement, then your money is away. So you don't want to have him demotivated because he was too much diluted. You want to have enough shares, always, but you want him to be and live and breathe and sleep his company, and nothing else. So his motivation is very important. Yeah. And I think it's always a good way at looking at, okay, how high can we go? Lately I had a case where we really believe it can go quite high, but that's a belief, you know. But as soon as you have this belief, at least you will accept a high valuation. Yeah. So that's the process I would recommend for founders. You have to show you go very high and you can really make it happen.
Mm-hmm. Yeah. I just talked yesterday to another founder who had a couple of bad experiences. It is her first startup, and in her first round she had bad experiences with investors. What would you, or is there something you would recommend to look out for? You know, how do you recognize a good investor from a bad investor? Are there any signs where you as a founder would be like, that's not for me?
Okay, it would be interesting to know why, definitely. I mean, but the trust, you know. So I will recommend every founders to meet each investors, which is a pain, but to meet them several times. Yeah. First, very simple stuff to do, but not only once. Then I will recommend every founder to go for references, you know, because an investor can be really a pain. Like your boss, like an employee, whatever. So why do you go for references for employees, not for investors? Because maybe you might figure out, this guy is a bad guy. When the numbers are not good, he will call you every day and put you under pressure. So I will really go for references, definitely.
It's a little bit like when you get a wife or something, you also call.
You should call in the references first.
I mean, I did that.
Oh, I forgot to do that, but I'm still good. Very lucky.
Very good. No, really, go for references. Met several times. Go for references and do workshops. Not only drinking coffee, but do workshops and see how we interact with you. Very simple stuff. That's the first one. The second one is the conditions in the contract, definitely. Yeah. There are some conditions you have to be careful, always the same, Liegpref, drag along, tag along, whatever, anti-dilution. There are some standards, so if you know it, and you know other startups, you ask them, and you should be careful with the conditions with business angels. Later on with VC, you have no chance. So always about negotiation, but then you will have to have these terms somewhere in the contract. Yeah. And with business angels, you should emit common shares. I think if low valuation, then you do common shares and no preferred shares, for example, all this kind of stuff. And I mean, I will really about, hey, are they part of the ecosystem or not, and are they experienced with young startups or not? You know, I know some of them, they are investing and they don't realize the risk, and they are losing their money and they're really getting so upset after. I know, guys, it's part of the game. They might be quite annoying. So really go for angels and not guys who has only invested in the stock market and who has never lost money before, because they might be quite annoying.
Yeah. Yeah. Very valuable. Thank you. I mean, we're going through stuff like that as well, and so very, very helpful.
Absolutely.
And the trust, you know. So if this is the way I try to do for the founders. There is always a lead, by the way. Some other stuff. There is always a lead. You should look for one lead and not 10 leads, because you don't want to call with 10 guys every day. Don't go in my position with 15 boss. To go only for one. Okay. No, go one or two maybe, but you don't want to call all of them every day. No, really, because they all have different opinions. But you need one or two, and they should be kind of sparring partner. You know, so they are the guys you can call if you have troubles, and they will help you, and they won't be loud, because why are you calling me? Solve your problems yourself. It should not be their role. They should help you, supporting you, solving the issues. Yeah. So having kind of very trustable angels is, I think, valuable.
Yeah. That's it's a relationship at the end also that's going to go for years.
Yeah, absolutely.
You can't just break up like with a girlfriend.
No, it's illiquid. No one will buy the shares. No one, except you skyrocket, but otherwise no one will buy the shares. So it's really illiquid, so it means you need a very trustable relationship.
have a question as well. What would you say is a warning signal when you say, watch out, this is not going to work? So what are warning signals to see if there's a misconception or even negotiation in the first early stage business angel trust relationship?
For founders, huh? Or for the
For
angels?
founders,
So in general,
for founders.
For founders.
Yeah. So on founders' perspective.
I think if it's important to speak about the strategies, to speak about business. You know, okay, not only coffees, know each other is fine, soft skills, okay, but then I have to speak about the business, the numbers. And if you see you're not aligned and you don't change, you know, you see he's not going to change his mind. He doesn't understand why. And yourself as a founder, you don't change your mind, you don't listen really, then forget it. Then there is a misalignment. And that's both sides, you know. When I ask the founders and I see they're not ready to change their mind, you know, they really have a plan, fix, then I know that's not going to work. And the same for business angels. You need to be able to understand why and change your mind. It's really important. And there are too many founders, they are so sure, so, you know, and that's wrong, guys. That's wrong. And then you skip it. You skip it because, you know, 3 months later, not 3 years, 3 months later you have troubles ahead because you're not aligned. So I would really recommend go into details, go in the numbers. I always do go in the numbers, not only the product and whatever. Go in the numbers. Why do you need these guys? Why it is salaries? You know, salaries is also sometimes an issue. High salaries. No, not when you start. And if to see they don't change their mind, then you skip it. Because, you know, you will get crazy about it later. And they will get crazy if they don't want to go lower with salaries. So, let's keep it, guys. Next one. They are really about, it is like in a relationship, you know, and are you able to listen and change your mind and learn or not? For both sides, huh?
Yeah. I can imagine, I'm just imagining speaking to 20 investors and everyone tells me to change it in a different way.
Yeah.
I can't change it every time.
No.
And I have some thought, or we have some thought of where it should go. So I can imagine it being quite tricky. Who do I trust? What do I change?
Yeah, and that's a gut feeling.
It's a gut
feeling. You need
feeling.
1 or 2, that's gut feeling, because you will never know.
Yeah.
If they are maybe better or worse. You need 1 or 2. And best case is these guys, they go for other angels. They say, okay, I bring 1 million with my peers. I'm the lead investor. I might be new board, you know, and I bring some other peers, and together we invest. That's the best case, because then you have a group. You know, they have a solidarity. You know, there is a lead investor. They trust the lead investor, and you have 1 mil with 1 lead investor. That's best case. It's not always doable. Sometimes you have 10 different guys. Then again, be careful. Be careful. No, but yeah, if they all want to talk to you every day, it's not good because you don't do business anymore and you get 10 opinions.
So what should I do as a founder? I mean, I come out and I have a plan and I go to the first business angel and I tell him what my plan is and I see he's not really aligned with my vision or whatever, how I want to do it. So I go to the next one and I do this over and over again. Or do I start to change quite early? Or what is the normal, or how do people do it? Like, do you approach 30 and always tell the same, and if it doesn't work, then you start to change and you start over again? Or is it more a process of like adapting? Because it's a little bit the same as if you develop a product or a service and you find potential customers and these don't like it, the first ones. So you might either change the business, the product or the service,
or change the customer.
or you change the target group, yeah.
Very tricky question. Steve Jobs always said, if I would have asked my customers, they would have never invented the iPad and iPhone. Huh? Never, because they would say, come, we don't need that. So it's a very tricky question. But I still believe somewhere you have to, either you have the gut feeling, you're a genius, or you still have to listen to your customers somewhere. And if you meet 10 investors and all 10 tell you it's not going to work, and you still keep the same strategy, you're either naive or very courageous. I don't know. But as long as you don't have the first customer giving you money, it's always about money. Huh? Giving you money for a service or a product, I can tell you it's not going to work. And you can still tell me, yes, it will. No, it's not going to work. Bring me the first one, no? And that's a tricky question. But I think this is iterations, the lean startup model, fix it, correct it, change a bit. And that's not always at the beginning, always after. And I think it's the way to go is fix, correct, change, and again, small iterations.
I think what I learned as well, it's all about assumption in a way. If you don't have the data, if you haven't tested it, it's all assumption. And one way or another, you can have. I think you should always be open for what their feedback is. But I learned to critically ask myself as well: is it really something I should take into account or not? Because I did the same thing with my first entrepreneur team. I had I pitched that, and had 10 meetings. One liked it, one said it's total crap. And if I always would have adapted it, I would have gone nowhere. And in the end, I really had to say, I had to go with my gut feeling. I said, that will be the first customer. That's the assumption I want to test. Either way, we do it or we don't. And we didn't do it, and then I said, yeah, it's not for me, because we can get as many assumptions in as it will be always hypothesis.
Yeah.
When you don't test it, when you don't have the data, you don't know.
Yeah.
And I think it's similar to investors. I mean, it's all hype. They bet on something, and maybe they're right, maybe they're wrong. Maybe you're right, maybe they're wrong. So try to close in a little bit and iterate.
Yeah, absolutely.
Yeah. Since we jumped to you, I wanted to also change the topic and go to corporate innovation.
Yeah.
Michel and I have been in corporate innovation for 2 years. You have been in it as well, Matthias. What is your experience when it comes to the cooperation between startups and corporates?
It's interesting. I think in a way, it's two worlds. The one thinks in minimizing risk, and the one thinks in maximizing risk. Of course, that's a little bit polar. You have different variations, but that's a little bit the basic. And what I think is super crucial is to have the same expectations. There should always be a win-win situation, especially if it comes to collaboration with startups. And that's a little bit what I think a lot of rethinking needs to happen. So if you want to work together with a startup, if you want to work together with the outside, what is the win-win situation for both parts? And I experienced for myself, I think it's what I always advise. A corporate can be an awesome customer, but it can cost you a lot of time as well if you don't do it right. And I wouldn't start too early because you need it always takes a lot of time. I think it's funny with the boot camps, we started a year ago and it's still into discussion, with a lot of NDAs, what is happening afterwards. So it takes a lot of time, and as a young startup, you don't really have that, right? You need to pivot, you need fast customers. And I think a good friend of mine once told me it's easier to do an MVP than to have a board meeting in a large corporate. It's so true. I mean, that is really, it's the unfortunate truth.
Yeah.
So I would say do it at the right time. It's always a little bit a question of maturity as well on both sides. Are you ready for it? Is the corporate ready for it? How are the structures? I think one thing is always to look out for, do they have budget? Do they have the backing? Do they have the decision-making power? And if they don't, that will take a long time, because then they need a board meeting and that takes 3 months to have a year to have them all aligned. So I think it has massive potential since it's moving quick and both sides are looking to test their businesses and test their ideas. But we're still young in the process. The holy grail, we haven't found the holy grail of corporate innovation, even though some people tell you they have, but I haven't seen it yet. And it's a lot of testing, it's a lot of experience, and I think that's a great thing. That should it be, but always think about, do you have aligned expectations? Do you have a win-win in the back?
Yeah, I mean, collaboration between startups and corporates is one way of doing innovation in a corporate. There's also the way of, there's companies wanting to build their own startups.
Yeah.
What's your experience there, and what type of person do you think is best suited for such a job? It's
an interesting one if you go into company and venture building, right?
Yeah.
So I believe it's always interesting if you have a new idea. People normally first thing they say is, yeah, let's build it ourselves. It's not that hard. So you should really think about that. It is a lot of time. It takes you a lot of time. It will take you a lot of investment. And do you have it? Do you have the time, or do you want to be quick? So if you build it with yourself, I think it's a great way of testing ideas and testing markets. You have some experience, like there are some examples for, there is one at Otto Group, there is Sparrow Ventures from Migros, they just opened. And so what I think is crucial is that you don't limit the spectrum. So you should really leave it open. You shouldn't connect it too much to your core business, because otherwise you can't pivot in the way you maybe should go. So these people should be really, really like super flexible in where they want to go and what they want to do. And it should be super open as well in how they can scale and evolve. Because otherwise it's, for example, there you could only work with Migros, or you can work with Coop, so you destroy half of the market. And so I think super independent, new ideas, bigger ideas, not always correlated to the mother house. I think that's important. The mindset of people. Me myself, I started in corporate. I was always doing my side business in a way, always trying to be entrepreneurial. So I think you need this open mindset. You need people that are flexible and that are willing to take risks. So it's a little bit entrepreneurship. I think it's the crux is always, or the hardest part is always this intrinsic motivation that you're willing to, like, that you go to the limit. Because as a corporate, you always have your basic salary, you always have your security. And as a startup, like either way you make it or you die. And that's not like, how can you create a situation a startup has in a corporate world? And how can you incentivize people in a corporate world? Because there's this massive risk, either way you die or you make it, but when you make it, you will be incentivized for it. And so how can you rebuild that in a corporate? I think that's the crucial question. Yeah. And that's what you need to do somehow. Otherwise, I think it's going to be a tough one to make it work.
Yeah, absolutely. So many familiar aspects you just talked about. There's so many struggles and trade-offs and challenges to solve, and it's definitely not easy.
Yeah. So you would say, for example, as Migros, you should support internal startups that do, I don't know, something with construction, or just that. Was that what you meant with
to keep it open?
Because it doesn't fit with when we had the experience that then top management comes and said that's not our strategy for our company.
Exactly, and I think that's kind of the worst that can happen to you, or not the worst, but I think that really limits it. I always see innovation. There is really disruptive innovation that is not always connected to it, and there is more supportive innovation. So supportive innovation of the status quo you already have, and I think that's what's happening in a lot of bigger companies. You try to support your status quo, you try to support what you have, and I think it should go beyond that you can have it like really open in a disruptive way. I wouldn't say you should do everything. I would say you should focus. You focus on, I don't know, health, or you focus on, so you have your area, but there you should be free.
Yeah. Okay, cool. So we're already at our last 3 questions. Any of you can answer. The fastest wins. No, it's just a joke. What's something crazy you believe that nobody else around you believes?
You want to go first, Nicolas?
Switzerland is the first country going to Mars.
Oh, nice. Really?
That's a cool belief.
That's nice.
I like that.
Did you call up Elon and
secret project?
Mars shots.
Very cool. What about you, Matthias?
It's a good one. I don't have a space project, but I think Switzerland, we need to evolve, but I think we can have if I look at AI, I think back in the day it was resources. Nowadays it's data, so they always say the new oil or crude oil of the future. And I do see the position of Switzerland really similar. So back in the day we didn't have any resources, so we started to perfection it. Like we did the late stage of what to do with the resources. And I think it can be similar in the way of AI and data. So we don't have the massive data, but we can curate and work on that one, on the perfectionism, on what to do with that data actually. And that's how I see the vision of Switzerland. I don't know if anyone else believes in it, but I think that's where I would put it.
Yeah, that's cool.
A bit more realistic.
You got
That's doable. That's good.
Is there any topic that you'd like to talk about, maybe connected to Digital Switzerland, that we didn't cover with our questions that you'd like to share with entrepreneurs?
No, I mean, maybe not especially from my side, Digital Switzerland, but I would say we need more entrepreneurs, we need more angels, we need more VCs, we need more CVCs. We need a good solidarity in the country, all over the places. By the way, it's fantastic to see what's happening right now in Ticino, for example, or in Wallis or in St. Gallen. So it's typically Switzerland decentralized. There are huge hubs. We shouldn't be afraid to fail, try again. We need a really growing ecosystem quickly. Also in regards of the politicians, the new Swiss entrepreneur funds. So the only thing I would say, we have a good pace, all together, all players, but it's not over. So it's only 1/3 of the journey. So we really need to continue growing. Israel is 3 to 4 times bigger, and come on, the country is smaller than Switzerland. Yeah. It's not possible. So we are 1/3 of the end journey. There is no end, but of the journey. So we need the pace. We need to continue.
I couldn't agree more. I think it's the same thing. We kind of already late in the game. So if we don't run faster than everyone else, we're not going to keep up. And I think that's what we really should focus on. We evolve. It's great how the ecosystem grows, and I think we can do a lot faster and better. And that's what I want to focus on.
Yeah, we're the same. We're just doing a podcast for future entrepreneurs to get inspired. So we're doing our small part. Absolutely. What's the last book you read, or blog post, or video you saw that you would recommend to entrepreneurs?
I have a good one. It's called Zurück an die Arbeit, and I think it was really the best book I read last year. A friend of mine told it I should read it, and it explains a little bit the difficulty. If you haven't worked in a corporate, it explains a little bit how it works. So how meetings work, what's the point of that, and what are the struggles and the challenges you have in bigger corporates. And I think one thing I always get out of it, or I thought like one enlightenment I got from it, is digitalization is not just about being digital. It's a lot about putting the customer back in focus. I mean, I had that in university, and I thought it's so basic, it's easy. But as soon as you work in more like in bigger structures, you realize it's not that easy. Just to putting the customer back on the landscape, it's super important, and it can be super valuable. And I think that's a little bit the misconception sometimes. Amazon is a great digital company, but after all, it really puts the customer in focus. And I think that's their genuine value, and digitalization is a channel after all. But that was it for me.
The last one which is coming in mind is called Scale-Ups Made in Silicon Valley, I think. A pretty easy one, no-brainer. It's really very well written about the different stages between startups and young scale-ups and senior scale-ups up to corporates. And it's all about customers, it's all about unit economics. So what I like in the book, it says very nicely and correctly, you cannot scale as long as you don't have proven your unit economics can scale. It's so simple stuff, but still it's very good to read it again with concrete examples. I will recommend this book to anyone.
Cool, thanks. We're very avid readers, so he's an audiobook listener, and I'm a real book reader.
Good.
So we love that.
So you have a plan for the weekend now. Nice.
Exactly. All right, thank you so much for taking the time and sharing it.
Cool.
Thanks, guys. Thank you for listening to another episode of Startup Stories. Make sure to check out the show notes with additional links at nerdentrepreneurs.com/podcast. And if you like our podcast, leave a review on iTunes. See you next Monday.